Welcome to The Debate. Today, our focus is, well, it's on this fundamental shift that's supposedly happening in global logistics. We're talking about the industry's deep, almost religious reliance on paper, the classic bill of lading, and whether blockchain is a realistic digital challenger.
And the core question I think we really have to grapple with is this. Does the steep learning curve, and let's be honest, the initial complexity of this decentralized technology, does it really outweigh the massive inefficiencies and the systemic risks we already have? The risks of relying on paper for modern global trade.
See, I come at this as a logistics veteran. The systems we have now, the manual ones, for all their flaws, they are proven, they work. They reliably finance and manage over 80% of global trade. I am profoundly skeptical of the feasibility and the sheer cost, both financial and in terms of governance, for everyone to adopt this.
And I'd argue that the current system is fatally vulnerable. It's prone to fraud, and it's inadequate for the kind of transparency that modern commerce demands. This dependence on fragmented paper trails creates what is fundamentally a data trust problem. And that's a problem that I believe demands the security that only a digital ledger can provide. Look at the sheer volume of vulnerability in the current paper trail. A single container shipment can generate upwards of 200 physical documents and communications. Just think about that administrative burden. The paperwork alone can be up to half the cost of transporting a container. This reliance on fragmented proprietary documents is the source of these crippling delays and, frankly, immense financial risk across the whole supply chain. Blockchain, it addresses this head-on by offering a unified, tamper-resistant ledger. It delivers verifiable provenance, a secure chain of custody, and automated enforcement through what we call smart contracts, plus permanent auditability. This isn't some speculative trend. It's the essential infrastructure for supply chain integrity.
I see why you emphasize those abstract risks, but let me ground this in reality. On the dock, the system I work with, it successfully manages global supply chains today. When I hear sweeping terms like systemic risk and new paradigm, honestly, I just hear buzzwords. Buzzwords that often mask these practical operational nightmares. Implementing this requires immense cross-border coordination, shared governance, data standardization across different cultures, legal systems, and competing companies. That's a monumental organizational challenge. It's way more complex than the software itself. And, what happens when the network drops? The paper still clears. How do you guarantee zero downtime for multi-billion-dollar movements? And here's the kicker. Who pays? Who underwrites the integration with all our existing systems, the ERPs, the SCM platforms? Let's just start with the technology itself. A lot of this conversation, it still just sounds like Bitcoin stuff. It feels entirely too complicated, too volatile for real-world port operations. My team, they need a stamp and a signature to confirm custody and move a container. They don't need decentralized consensus algorithms to validate every single transaction.
And that is a really important point about perception. We absolutely need to decouple this enterprise ledger technology from cryptocurrency speculation. Forget all the noise around Bitcoin and digital assets. At its core, what we're talking about here is a distributed, permissioned ledger. It's a system where trust is built not on a central server you hope doesn't get hacked, but on pure mathematics. The security guarantee comes from cryptographic hashing. Every new record, every block of documents, is mathematically linked to the one before it. So if you try to alter a single document in the past, the hash of that previous block changes, and it instantly invalidates every single record that comes after it in the chain. That provides the guaranteed immutability you need for something as critical as a bill of lading.
Okay. I appreciate the clarification on the math, but the question is still there. Is anyone actually moving billions of dollars of cargo based on this math yet? Or are we just stuck in, academic pilots?
We are far, far past the pilot phase. This is active, proven technology built on enterprise platforms like Hyperledger Fabric. You just have to look at IBM's Food Trust. That application allows huge retailers like Walmart to trace the origin of food products in seconds, a process that used to take a team days, if not a full week, to do manually. And then there's TradeLens, a joint venture with major global carriers and IBM
specifically designed to give a secure, single view of shipping data to shippers, to customs, to port operators. These aren't just concepts. This is core infrastructure for huge enterprises that demand real-time transparency.
My skepticism isn't just about the tech, though. It's about the fundamental issue of institutional trust in business. When I deal with my long-standing partners, I rely on their handshake, on their established paper stamps and verification methods. That framework, despite its vulnerabilities, it's the stable foundation of our relationships. Why would I replace that tested human trust with a potentially fragile and complex coding structure?
That's a compelling point about historical relationships, but have you considered the scale and speed of the modern supply chain? When your chain spans continents, you're interacting with dozens of parties, often strangers. You can't trust individuals in that scenario. You need trustless code. The system itself has to enforce the truth. The physical system's deficiencies are profound. It's not just the bureaucracy or the delays from lost documents, but also the vulnerability to physical paper forgery, which is, let's be honest, far easier than cryptographic tampering.
But forgery is a known risk. We manage it. We have traditional means, legal enforcement.
Sure, and yet, digital solutions dramatically lower that risk profile, and they speed up the recovery time. Solutions like Wave and CargoX are explicitly trying to eradicate the paper bill of lading, the BOL, by providing a secure, digital, auditable account of the shipment's journey, the eBOL. Because every authorized person gets a copy of the ledger and any changes require network consensus, the data integrity is jointly secured. It fosters trust between partners who've never met. We saw the concrete impact of this in a pharmaceutical pilot. Tracking drug traceability, a process that historically took 16 weeks with paper, a critical delay for medicine, was reduced to just 2 seconds. 2 seconds. That is the definition of revolutionary risk management.
I will concede that the speed is impressive. It is. But that speed still requires every single entity, the customs brokers, the insurers, the banks, to accept a digital asset instead of a piece of paper that has decades of legal precedent behind it. That's a profound legal and cultural hurdle, not just a tech one.
It is, absolutely, but the legal framework is catching up precisely because the financial incentives are so powerful. So let's pivot to that, to the financial incentive, specifically smart contracts. These are basically self-executing agreements that are coded onto the blockchain. They automate payments and procedures when certain conditions are met. Say, data from an IoT sensor confirms a container has arrived. This automated, fair, and trustful process makes payment swift and transparent. It drastically reduces disputes and minimizes the need for expensive intermediaries like lawyers and brokers.
That logic holds. I get that. But I have to go back to the biggest hurdle, adoption. Before we get to automated payments, we have to talk about who funds this massive operational overhaul. You are asking thousands of smaller logistics providers, freight forwarders, customs agents all over the world to integrate with a new, complex network. That huge initial capital investment and the governance structure needed to maintain it, that remains a monumental obstacle, especially for smaller players.
That's a fair and essential objection. The non-technological barriers, governance, standardization, upfront cost, they are undeniably the primary hurdles. However, the business case for overcoming them is becoming financially compelling, even for smaller companies, because of the ROI. This technology is helping to close the $2.5 trillion global trade finance gap, a deficit that's largely driven by banks being unwilling to lend against opaque, paper-based documents because they can't trust them.
And how exactly does a digital document solve a $2.5 trillion problem?
By providing immediate, transparent, and immutable collateral management. Platforms like WeTrade and TradeIX show how the swift, trusted execution of these transactions enhances financial liquidity for institutions and makes debt repayment faster. And we have practical evidence on the operations side too. Early use cases, just digitizing the documentation, have cut administrative costs by a very substantial $100 to $200 per container for some big companies. When you scale that efficiency across major shipping lanes, the return on that initial investment, even with the steep governance costs, it's realized very quickly.
Okay, I can accept the financial evidence, On the large scale, it's a compelling case that digitizing documents and streamlining payments, it generates enough ROI to justify the initial cost, at least for the big integrated carriers.
Exactly. And that financial foundation is what's crucial for meeting all the other demands of modern trade, like traceability for ESG mandates, ethical sourcing, and building real supply chain resilience in a world that is, constantly being disrupted.
I have to admit, the evidence on the quantifiable savings, the administrative costs, the faster processing times, and the ability to free up capital, that does demonstrate a clear economic case. You've established the ROI is there for the players who can afford the jump. Okay, that actually makes financial sense.
And what we're doing is transforming trade data from these proprietary control points into a shared, immutable asset. It ensures transparency and security for all the authorized parties.
I accept the financial necessity of it, I do. But I stand firm that the technology problem has largely been solved. The enduring challenge is the human problem. The coordination, the change management, the political and legal buy-in you need to standardize this across competing ports and carriers and governments. The success of this transition is going to hinge entirely on governance, not on code.
And the code provides the necessary mechanism for that governance to operate seamlessly. It offers that single source of truth that everyone has to adhere to. We agree there are miles to go, but the path forward, well, it requires the step.